All right. Hello, everybody. It's Greg here from Ragosa. Welcome to the channel. Thank you for joining us today, and I hope to earn your like and subscription. Right now on this video, I wanted to share with you guys how I set up my workstation. So, this is the Interactive Brokers TWS, the trader workstation. Um, On my desk here, I'm running three monitors, and I laid out this YouTube video in the physical orientation of my monitors. So on the top monitor, you've got depth of book, the tape, my active orders that I'm working. And then on the bottom two monitors, this is my whole intelligence setup. Now, guys, don't roast me for having the technical analysis on there. The MACD and RSI and Bollinger Bands make me feel comfy. I like the vibes. It's like millennial gray in the kitchen. Ugh, whatever. You'll notice I've got Bollinger Bands on the VVIX. Like, ugh. Anyhow, let's not get bogged down on that. So yeah, this is what I look at for the majority of the day. It tells me what I need to know, and it gives me um, action indicators. So left to right here on the bottom monitors, I've got one asset that's just of interest. Right now, I'm watching SpaceX because space is cool. Below that, it's the Eurostock 50 index. Keep an eye on what's happening over at the Eurobros. It seems decent enough. It's a big global pool of liquidity. So when that thing moves, it's going to move the U.S. markets too. And then we've got 10-year Treasuries. It's a great idea to keep an eye on how fixed income is moving. Um, I've got the Euro USD futures contract. That is really good for kind of getting a feel on how foreign capital flow is moving into the U.S. markets. Then for myself, I am primarily an S&P 500 volatility trader. So I've got the S&P 500, and then below that, I've got the M&Q, the Nasdaq 100, just because it's another big liquid ETF. 95% of the time they move in tandem, but it's kind of cool to have them for divergence. Um, on the next monitor here, I've got VIX, which VIX is the VIX. It's all important. It's what drives what I do. Then the VVIX, it is basically the indicator of your VIX. And I can go into that in more detail in another video. And then we've got oil, super important right now. I mean, who knows when the Americans or the Iranians are going to go blow something up. So you've got that. Below that, you've got gold, similar importance. That can drive the market, a place for volatility to hide on out, kind of panic. It's just good to know. And then we've got agriculture. It gives us kind of an idea on how inflation is running, how oil is, like the energy is moving through and pricing assets. And then also, you know what? They're kind of fun to trade. So I've got wheat and corn sitting there. Right now, those markets are closed because the egg traders get to go home early. They also start an hour earlier too, so farmers' hours, I guess. Uh, Unless they're in harvest, then they've got a lot of hours. Um, Here, let's pull up the the spy. Now, this is a really good, important set of windows that really just kind of ground me for the day here. So these are all the sector ETFs. And then, I've got a big chart of SPY, big chart of VIX. And on here, these are all 6-month daily charts. This is not giving you in this is not giving you intraday information. The biggest bit of intraday information you're going to get from this kind of setup that I'm looking at right now is the percentage change on each of these assets. That's, if it gives me a feel so I can quickly look through. It's like, okay, we've got some rotation out of consumer staples, a little bit of movement into healthcare, and a lot of cash is going into XLK, which is the excuse me, which is the technology ETF, and then XLE is getting a bump because oil's getting a huge bump at almost 2.6%. So you'd expect oil to be up. Interestingly enough, the industrials and the materials are getting a bit of a bid today. So, that tells you something a little bit interesting is happening in the market. Because usually, if energy is going up, those materials and industrials are not going up with it. They're really sensitive to input costs and logistics and things like that. And then I also have the equal weighted S&P 500. So that equal weight S&P 500 is really helpful to know, is the S&P just churning, or is more capital moving into the market? And we can look down underneath the S&P, the SPX window right there, and I've got TLT and UUP. UUP is the dollar index, and TLT, being treasuries. TLT being down kind of gives me a hint that maybe some capital flow is moving out of fixed income and moving into equities. And then dollar index being up, it's like, okay, maybe there's some foreign capital flow into U.S. markets. We can see that it's hitting the 800-day SMA, 4-year SMA. So a lot of people globally are thinking America could be a place of strength. I don't know. I'm not a global macro trader. This just gives me some kind of roadmap to see, are my strangles, is there a fire going on in my position? Yes or no? VIX here, we can see, where are we usually? We are right where absolutely basically nothing happens. At least it's bid enough to stay in the trade. There's still some juice for us to extract, but whatever. GLD being up, it could be any number of reasons. I don't know. Quite honestly, I don't really care. So that is what this window is. I like to look at this window at the start of the day, kind of like 5 minutes after cash open, just get an idea of how the institutions are deploying capital right out of the gate. And it kind of sets the tone for the day, because these things take a spike right at open. And then the risk and what is the risk and the price discovery. Price discovery happens throughout the day. So we get all these orders that come through, and we want to know, where are we sitting? And then that dissipates through the market. Or there's some big orders that are trying to get worked through, like maybe a pension fund needs to buy $100 million of Microsoft. It's like, okay, well, that's got to work its way through. They're not going to hit that all in one order right at 6:30. So, that gets priced out, and then all of those movements, kind of move around, and everything is related in some way. And the fun aspect, or the headache, or how it depends on how you position, is that you don't know how this stuff is correlated at any given time. You can have some kind of idea. You can run a ton of math on it, and a lot of people do. And it can be helpful. It cannot, but it's just good to know how things are moving. You keep it in your head. That's why I've got this there. I don't look at this day in and day out. If I was a long-term portfolio manager, this would probably be one of my main screens, because I'm looking for, real price assets. Like if something hit one of these blue lines, which is the 200-day SMA, then I realize, okay, this is a good time to actually deploy, start picking up some cash, or start picking up some more positions, rather than just the usual monthly distribution. And then when things hit the purple line, which is the 800-day SMA, that's when the Buffett isms pick in, be greedy when people are fearful. That's when everything is 100% on sale. So, get buying when the buying is good. Um, what else? This is what my options chains look like. I've got two here because this one is usually on ES. I trade the micro E-mini just because I'm a really small Johnny one lot trader at the moment. Um, but it is important to know how let me just whatever. It's important to know how the big board is being priced relative to the small board. The small board's going to have um, more spread, and oftentimes the market makers will pull quotes during the day or definitely in periods of high volatility. So if you've got an order resting on the book in MES and you're like the only one in the market, you need to price yourself off of ES. And so that's why I've got both of these pulled up. It's also kind of nice too because I can look at the same instrument and compare contract cycles. So um, I can look at the 45 day to expiry, the monthly contract right here on one window, and then I can look at, let's say, like the 120 or 90-day contracts on the other window, and that's really nice. Then on the bottom, you can see there's the volatility curve on how the contracts are cycling out. You can see literally right there, it's a graph. Volatility is not constant. Black-Scholes model is a lie. That's a rant for another day. But there you go. That's where we make some alpha. Um, and then you can see the historical volatility right next to it, and that just helps us know, how things are bid. In everybody's trading platform, you might see your historical implied volatility be somewhere different. You just got to find it. In interactive brokers, this is where it is, or this is how you get it. You get it in the chain, and then you try to find some place to shove it into your monitor. Um, it's just as good as you can get. The majority of my work happens on the right side monitor here. And that's just because I've got more monitor real estate to put in my strategies and build my order. So if I'm in the middle of a trade, literally what I'm staring at most of the time. I've got this just to keep an eye on treasuries. Are things going crazy? If things are going to go crazy in the market, the treasuries are going to move. They are going to move. If the tech is going to go nuts, M&Q is going to move. And remember, even though the Meg 7 is pretty prominent in the S&P 500, it is not everything. So if the S&P is staying relatively flat and technology is going nuts, there's a huge intersector rotation or inner index rotation, and just chill. But anyhow, this is what I look at. Um, we want to look at let's look at the top screen right now. We're just hitting 12:30, so this is 12:30, which would be 3:30 Eastern time, or 3:32 right now. Sorry. The brokers start posting margin warnings for people on their account. If your account is going to get to the part where it could end up being margin deficient at end of day, people get this notification right now, and people start to manage their book right now. So it's really fun that we get to look at how the market is moving right now. And you can see the depth of market in MES. It's not so deep, but it's better than nothing. The depth market used to be really good, like 10, 15, 20 years ago. Now with hidden orders and iceberg orders and just being able to send stuff out piecemeal super fast, the liquidity is much deeper than what the book currently suggests, and it honestly it's just kind of nice to watch the thing bounce up and down sometimes. What's really important though is the actual tape. And so that's, seeing the orders and the size go through, and you want to see, just keep a rough eye on there. How fast is that tape moving? What kind of size of lots are going through? Are you seeing 3-digit lots? Are you seeing 2-digit lots? Are you seeing rapid fire single-digit lots? It all tells you something. And then looking over to the 30-second candle, this is really zooming into what is happening right now. 30 seconds is a long time in the high frequency world, and it is a very small amount of time in the human world. And you have to remember that the stock market is just one great big auction. But you might have some huge dump through the book, like, the book's getting swept or something like that from some algorithm that's just gone haywire, or maybe the FOMC, made some kind of announcement, whatever. And you're going to see some big moves in the 30-second candles, and then they can get bought right back up. The 30-second is just really good to keep you grounded. And then below that, you got the 15-minute candles. And the reason why I like the 15-minute on there is because I basically see the whole day's action. So it's right there. Now, one thing I want to point out to you guys, though, is that those windows dynamically adjust. So the size of the candle, the window always stays the same. But one candle is not always the same as another candle. And so, it can really mess with your mind a little bit when you're starting out, and you can kind of fall into some traps. So, just remember, not all candles created equal, and the size of adjustment from that window can actually tell you some kind of important information, just how much variance is entering the market. But that's another thing for a totally another day. What else to show you? Here is, yeah, we're back there. That is it. I think that is it. All right. Thank you very much for watching the video. If you have any questions, feel free to shoot them in the comments. I'll try to get back to them. And have yourselves a great day. Good luck trading.